finish the morning session in terms of content. I'd like to invite Arun Subramanian. He's Vice President at SAP Globalization Services. And yeah, so.
Sure, thanks. Am I audible? Okay. Last session before lunch, and typically not a very interesting one because I'm going to talk about taxes. Indirect taxes, that too. It makes life miserable for all of us. I know it was Mark Twain, I think, who said, if there is something God cannot comprehend, it is indirect taxes. It's very true. 60 years of independence, we still have millions of arbitrations still piled up in the courts. And now we are standing at a point in time where a new tax regime is probably going to take over from the old tax regime. The session in the Rajya Sabha will start at about 2 p.m. It's supposed to be a 5.5-hour debate. Then we will know what the outcome is. Either way, life is not going to be easy for us. What I thought I will share with you was not about the details of GST. I mean, there are going to be several sessions on GST. The model law is out, and then we're going to hear a lot about it as we go by. The expectation is that if it is passed today or tomorrow, the law will be kicking from 1st of April 2017, subject to the IT infrastructure being ready, which is the GSTN and its backend, and subject to the tax officers being trained, because it's not enough that we corporates comply with the law, but the tax officials also should understand that this is the new law. I'll be talking more about that bit of compliance that is required, which is going to be very different in the GST regime as compared to what we've been having today. This is my agenda, but I'll just I'll shorten it because I know all of you will be hungry. I'll focus on the few bits here, and then we will take it forward in a detailed session where the team is going to talk about the solution proposal and things like that. Now, this is where I want to focus my attention on. Everything is going to go digital. All of us, of course, our transactions are digital in nature. We have an ERP at the back end, and then our purchase orders, sales orders, invoicing, everything has been digital for several years or decades now. But what's going to change in terms of going digital is the B2G communication. So our registrations that we have today will be converted into GST registrations. It will be PAN-based. It will be at a state level. Ideally, one registration for all the operations in a particular state. There can be a change if there is a new business, if there are different business lines where you will have different registrations as well. So the registration, the government encourages all of us to register online. The data will be auto-populated and we'll have to fill up some more details. So that's how it's going to be. The second thing, which is the key here, is all sales invoices that are B2B will have to be uploaded onto the GSTN portal, period. B2C, non-GST transactions, there is a different kind of an upload, but that will also have to be uploaded, consolidated. Here it is expected that you will have to upload it at a HSN code level or line item level. The law is a little unclear about it at this point in time, and I think going forward we will know what is required. How are you going to upload it? You have two options to upload it. Go into the GSTN portal, key in all the data, or you will have APIs that will be written and exposed, and with that, you will be able to consume those APIs and push the data in. The catch here is, these APIs are not going to be exposed to all of us. So there is a concept that's being introduced called the GST Suvidha Provider, GSP. So a GSP will have to sign an MOU with the GSTN. GSTN is a Section 25 not-for-profit company set up by the central government, which holds a 24.5% stake, state governments, which hold another 24.5% stake, and financial bodies like LIC, HDFC, and others, which hold a 51% stake. This is how the construct of GSTN is. GSTN's backend is being built by Infosys. So they will have a set of business rules, and they will have a set of APIs that if they will limitedly expose to us. The GSPs will consume these APIs, and the data will be transferred. It could also happen that every API consumption will be charged. This is a proposal. So which means there is going to be a chargeable model for reporting and for tax reporting as we go into the next period. Uploading of invoices, yeah, as I said, you will have different categories. And because you've uploaded because each corporate will upload all its sales invoices, automatically the sales register is ready. The purchase register also is sort of auto-populated because someone's sales is someone else's purchases. And there is a link. GSTN for every GST registration number will provide us with a ledger, will show the debits and the credits. So you will know what has been procured and what has been sold against a GSTIN number. Which means compliance as such, probably over a period of time, will be reduced in terms of time and effort. We will see how it goes. I mean, there will be teething problems, and we'll have to see how it progresses. Tax payment is also going to be online. 10,000 rupees and below, you can go and pay over the counter. Anything above that has to be an online transfer. This GSTN is expecting 3 billion invoices to be uploaded every month, which means about 35 to 40 billion invoices per annum. And if we assume that the same rules of excise will apply for GST, where you will have to have 5 years of data with us, and GSTN also will have to have it, and with an expectation that the number of invoices will grow by 10% annually, we can just think of the number of invoices and the kind of data that will reside in the GSTN system. So the GSTN system that is being built is not vendor specific. It will be horizontally scalable. It will have to have disaster recovery mechanisms. It will have to have replication mechanisms. It will have to have parallel processing. All that is being worked out by GSTN and Infosys. And sometimes software vendors like SAP and others are also invited for discussions so that we can provide some inputs in terms of how easily legislation can be done, and in terms of also how they can manage the data and the hardware. So this is overall the construct of how the digital agenda. And here I'd like to point out, when a romantic couple, goes for a tour or something in India, they visit the Taj Mahal. Similarly, I think a data scientist will really salivate if he goes to the GSTN office. I mean, like the IBM colleague said, maybe you won't see the data, but there is so much of data that you can play with actually. That's a big revelation, and that's going to be an IT wonder. And I think, like one of the oil companies which was set up as a fantastic refinery, where even Aramco's and the Shells visited India to see this refinery set up, I think we will see a lot of IT tourism probably going forward. Rates as such, we are not sure, because there is a talk of 18, 22, 23, 27, and then a capping and all that. We will see how it works out. But in effect, what it will mean is that excise and GST will coexist. A company that is dealing with GST-able goods, if I may call it, will also be buying diesel. So petrol, diesel, alcohol for human consumption is currently kept out of the GST. It will be zero rated. Tobacco is also, I think, zero rated. But we will see a change in terms of the way other things operate, because the rest of the things will anyway fall into the GST regime. This is an overview. I will not go into the details because there is a detailed session. I'll just mention 3 things here. All indirect taxes except stamp duty, registration charges, and service tax on utility bills, and of course petrol and alcohol that I was mentioning. Other than that, all the other indirect taxes will get subsumed into GST. There will be 3 components of GST: CGST, which is central GST; SGST, which is state GST; and IGST, which is called integrated GST. This integrated GST will be applicable on any interstate supply. GST will be a tax that is based on the destination principle and is a tax on supply. So excise was a tax on manufacturing and goods movement. Sales tax was a tax on sale. This will be a tax on supply. So we can expect some taxes for STOs going forward, stock transfers. We will expect some taxes probably for subcontracting. We'll have to see how the law evolves and what the considerations will be. Another important thing here is the credit for input tax will be available subject to our vendors uploading the invoices into the GSTN system. So what we buy is what our vendor sells. So the vendor has a GSTN registration number. He will upload his sales invoices into the GSTN system, and it is on the basis of that invoice that we will be allowed credit. So the credit period is now moved by one month. So if you have a monthly reporting, the period is moved 1 month. So the first month of GST, we pay from our pocket. The next month onwards, credit is available, provided the invoices are correctly uploaded. This I see as a very, very big change and a challenge, because we will have several vendors who, one, would not be exposed to such IT-related activities and tasks that will have to be introduced into their system of work so that we are able to ensure that we don't have a working capital problem. The rest of it, anyway, there is a detailed session in the afternoon, so I will not go into the details here. The localization team will talk of the solution proposal, keeping in mind what we know as of now, what is in public domain as regards what the law is sort of panning out, and then we will work out the details and take inputs from you as well. Just some business, we'll not focus on this, we'll focus on the other side, which is the right-hand side for you. What GST is aiming at creating is one pan-India market for taxes. So you're going to have an unbroken tax chain across the geography of India. East, west, north, south, wherever we go. This is the overall objective of GST. When that is created, the first question that arises on our mind, if we have a lot of warehouses and depots that we've created it from a sales tax point of view, especially to take care of CST, will be, do we need to take a relook at it? What is it that we need to take a relook? Do we have to work on it? Do we have to change it? So while we fix the compliance part first, the next exercise that needs to be looked into so that there is a business benefit from the new tax regime is on how we want to realign the supply chain, how we want to realign our sourcing policy here. Because we would have probably adjusted to buying from vendors because we have a depot in a particular state. We'll also buy from that state, set off the VAT, and then stock transfer the goods from the depot back to the manufacturing plant. That is something that maybe we want to take a relook at. The cost of holding in a warehouse versus cost of transport, which is probably higher or lower, that is a kind of a business decision we probably will have to take. There will be reduction in reporting efforts. I know there are close to I think there are about 400 odd reports and annexures an organization will have to submit if it is operational in all the 25 states in India. In the GST regime, it will reduce to, I think, 8 or 9. There are about 8 or 9 reports. You'll have a sales report, a purchase report, consolidated monthly report, something for input service distributors, something for e-commerce operators, and so on, and then one annual report. I think totally it comes to about 8 or 9. So that is the reduction in the numbers that we will see. Compliance is another part. Now the model law says that if an authority, be it a state or the central authority, if one of the authorities issues a notice to one of the registered bodies which has a GST number, then a parallel notice will not be issued by another authority. In today's world, it's possible. You'll have an excise notification. You can also have a sales tax notification. And you'll have to address both the auditors sometimes at the same time. Here the agreement is that in case of kind of a thing that comes up, we will have it will be followed by, so that there is, in terms of compliance, it's made easier, and in terms of a body, it looks as if it's one body that a corporate is responding to, because we are assuming that it's going to be one tax. So that is the other part of the compliance that'll kick in here. Of course, in terms of benefits, there's a lot. Simplicity, then reduction in time, then uniformity of policy administration. The government has also has written in detail about what the transition provisions will be. What do we do with my excess NVAT credit? What do I do with my excess VAT credit? And things like that. How do I handle it? How do I handle a scenario where I've sold in the excise regime and I'm having a returns in the GST regime and things like that? All these, in terms of provisions, have been put down in the model law, which is available on a website. I showed it in one of the previous slides. You can go into the GSTN's portal and download this document and keep ourselves updated on the happenings there. In terms of what we intend to do from SAP side, of course, we started by forming work groups as early as in November 2014. And the law also kicked in, and there were a lot of negotiations that the politicians had. It was passed in the Lok Sabha more than a year ago. And then we have the Rajya Sabha discussions today. So over this period, what we've tried to do is, with whatever we know as available in the public domain, we tried to categorize it in terms of how operations would be similar in industry bodies. So in manufacturing and automotive would probably go together. Tobacco and alcohol and petrol would go together because they would be in a dual tax system. And services is another area where all purely service organizations that were handling one authority, which is the central excise authority, will now be facing two authorities, the state as well as the center. So a service organization would probably need to do multiple registrations if they have offices in multiple states. That's also something that will need to be looked into as well. So we categorized it and we entered into discussions. We also have a jam page for the work groups of customers and partners, because it's going to be, once the law is announced, there are going to be lots of changes. And by the time the final law is ready, it will probably be November or December. And April 1st is the time we have to go live. So there's hardly any time. With such a short time that we have, it's important that we start doing certain preparatory activities ourselves. We've reached out to a lot of our customers and the partner community to tell them that one of the prerequisites is to move to tax INN. So if you haven't, please do it. If there are partners on the floor here, please go to your clients as well and tell them that they'll have to move on to tax INN. And then the jam pages have all the documents, the proposals for solutions that we've created. Please go through them. You can even download them. You can take it to your... We want to keep all the information available to everyone because we don't want anything to be missed out. We will be hard-pressed for time and resources to support the community and the ecosystem if we delay. It's not going to be easy. So that's something that we'll have to start planning as early as maybe tomorrow when we know all the details and work things out. This is more about the architecture of the GSTN. So here you see that the taxpayers can go to the portal. There is a GSP. This is an MPLS line. MPLS VPN, something Raja was saying, is not a must in the new world of internet, but that is the government of India, so we will live with it. So the GSPs are here, and this is the kind of an architecture diagram that's been put up, where we will do the talking with the government from a B2G and G2B point of view. Is it okay? Fine, I will not stand between you and lunch. Have any questions? Please ask them to the development team at 2 o'clock. Have a good lunch and a good day. Yeah, thank you very much.